City said the team.
Ladies and gentlemen, welcome back. Chart Talk coming at you February 22nd, 2022. Happy Tuesday to you out there. Let's see, we got World War III going on. The Fed's about to hike some rates. You know, every headline you get in the market is terrible, but let's just break down what the price action has been telling us recently. So without further ado, let's head right into the market outlook. So we got the SPY up, the S&P 500 on my screen, and the market's just been heavy. You know, we have a lot of headwinds, a lot of bad news coming into the market. Everyone's scared of the rate rising environment. Right now, just from a pure price action standpoint, the SPY, the S&P 500, seems pretty poised to test these 2022 lows down at the 420 support level around here. You know, you look at every major sector, they're all looking pretty similar in this regard. Where you know, we got a little mini bounce last week, and then we just started selling off pretty viciously. So you know, markets are heavy. You know, high cash levels are definitely still recommended. This is definitely more of a fast traders market. I think the only people really making money in this market is if you're to the long side, if you're scalping, or if you predominantly be going short this year. You know, that's just the price action we've been getting. But you know, it's really as simple as that. Markets are very heavy. We got a lot of headlines going against us right now. And we, you know, when we have such a huge support area so close, it almost seems like we have to touch that area before either a bounce or we'll see what happens from there. What are your thoughts around this area, Ben?
Yes, I mean, the one sector that is the only one, at least in my opinion, that's kind of setting up in the short term is the consumer staples. VDC is a simple example. If you think of stocks like last week you mentioned, you know, Altria, MO, Philip Morris, Coca-Cola, Pepsi, Procter & Gamble. Stocks like those has been the one sector, other than really energy, that's been pretty strong or somewhat strong relative to the other sectors. So that'd be the one that if I was going to focus on any type of short-term trading in the next week or so, it'd be focusing on those consumer staples that really haven't gotten too banged up. Where virtually every other sector, they pretty much all look the same as basically the S&P, where we're seeing that H pattern coming down into lows. And you can pull up any other sector, mid cap, small cap, large cap, or even individual sectors. They're all kind of following that same Hing over pattern. Some are farther ahead, like the SPY is basically kind of one more day away from that H pattern, where like materials is still in that upper end of that the curve part of that H. So some are kind of playing catch up, some are kind of ahead of the game, and we're pretty much just following kind of the broader markets to dictate where we see that going. And usually if you just draw out how that pattern ends, if you're just drawing with your finger, you're ending up lower. It's not like you're not expecting that to be a bullish pattern. So stepping out of the way and letting the market or the participants that are fearful with this headline news, it's like just let them be fearful and just kind of board the train when everyone gets off it and thinks the market's going to come crashing lower.
Definitely with you there, and I think you made a good point with consumer staples, and the reason they've been so strong is we've seen a flight away from anything growth. And if you look under the hood of the consumer staples, these stocks have great valuations, low PE ratios, all of these things that aren't really, they don't really matter when the market's trending higher and anything risk on is just flying. Now we're seeing that flight to stocks with decent valuation. So consumer staples, that makes perfect sense for this environment.
Yeah, and even on like a because you and I, we can kind of fall into the jargon a little bit since we do this all day long. But for like in a more simple sense, like with consumer staples, it's you're gonna still buy toothpaste if you smoke cigarettes. Exactly. You're gonna still, even though you're not gonna really change
cigarettes.
Cigarettes, or I guess vapes. I don't know. You tell me what you're puffing on.
But MO is puffing.
Yeah.
Whoa.
But those are the things that, regardless of what's going on in the economy or whatever the fearful headline is going to be, that's a sector of things that you're going to use no matter what. It's not like you're not going to buy a Peloton bike or buy one because of what's going on, where you're going to buy the toothpaste, you're going to buy the soda, no matter what. So that's just kind of a simpler...
Cigarettes.
Yeah, or I guess vape pens, whatever's hip these days. But what do you want to...
God, you sound so fucking old.
What do you want to go to? What, top ideas next?
What we got next? Top ideas?
Yeah.
Yeah, so I'm not gung ho with executions, but keeping my eye on a few different things. This is a trade of the week. This PKG. So I love this setup. What they do is they produce, for the most part, in the most simple term, they produce cardboard boxes for shippers. They have all these other little logistic things going on, but they're just really about shipping solutions and cardboard boxes. In this day and age, everyone's ordering from Amazon. I have 20 cardboard boxes come to my house every week. That definitely is more of a staple. Something funny over there?
No, I'm just.
And then we look at.
Just
What?
sorry.
What?
When you said like the 20 cardboard boxes, I was just thinking of I was gonna ask you what was the most boxes you've ever received from Amazon, but.
The most boxes I received, 150 boxes in 3 days. When Bennett had this great Amazon business idea. Well, we'll get into that another time. All right. So as far as PKG goes, so they had great earnings. They guided higher for the rest of the year. They gave that nice move on earnings. It was too big of a move as they head to this resistance level. And now we're starting to see it flag out, go sideways. And if you look at what major markets are doing, selling like crazy, this PKG is just holding up so well. So when the market does finally want to bottom, this is a stock I'm very confident in that it wants to see new highs. So this is the one name that I really, really like. It's setting up below 150, and you can look for a tight entry there. But, the market's still looking at like it has to shake out some weakness. So I'm not super confident in the setup. I'm not loading the boat on this one. But definitely one that if we do see the major turnaround in markets, that's one I want to gravitate towards. This URI, I've been bearish on this name since it couldn't hold the 200-day simple moving average. And now it's kind of getting a decent setup to get short here. And if it wants to break these little lows around 308, it looks like it's got some further downside. So definitely want to be prepared for the short side if you're trading actively in this market. But we see this trend ever since it broke these highs. It was in a nice uptrend, broke these highs, broke down, and now we're seeing a trend to the downside. So now it looks like it's going for the next leg lower through that 308. Definitely really like that one. A name I'm waiting on, Kellogg's. We're going through value names. Kellogg Company, Kellogg's, Rice Krispie treats and all that. They're setting up this huge macro pattern. I'm thinking the trigger here is going to be 68. Now, if we look, it looks very choppy on the daily chart here. But if we head over to a monthly chart, we just see some beautiful, beautiful consolidation since, the last, 3 years this thing's been consolidating. So if it can break above this, 68 area, looks like it's got some serious room to run. I definitely like that one for the longer term. I'll be buying this one in the long-term account. This BDX, this is another more macro name. BDX, daily chart. We see it began to break out on earnings. Really strong earnings move. And now it's coming back to retest this area. And if we look, if we zoom out, we see this massive base that's formed. So it began to break out of the base. And we'll go to the weekly chart here. You can see how serious this consolidation is. Breaks higher out of this base. Now it's coming down, looking to retest this area. So we want to see it go sideways a bit more here. And then look for an entry on the way up. Maybe that's 265. Maybe that's 270. We'll see how it shakes out. And this AIZ, this is more short term here. AIZ, finance company, insurance company. But what are they doing here? They're just giving us a really nice earnings flag around highs. So, they gapped up on earnings, and now it's digesting that move going sideways. Again, the more it goes sideways in this area, the more we like it in the future through this 168, 169 area. So that one's setting up really well. But, again, I'm much more hands-off, much more cautious, waiting for this market to just rinse everything out before we start looking for more longs. Definitely want to keep my eye on the best strength out there. What are you looking at?
So I got two. So one is actually, Kusha mentioned this morning, this CINC, recent IPO.
Cincy Financial?
No,
Syncor
CINC, recent IPO.
I didn't see this one at all.
So yeah, just little,
Nice little bull flag at highs.
Nice little bull flag at highs up through 26.
Yeah, very thin name, but if that 25.50 breaks, it looks like it gets right back off to the races. So that one looks pretty good.
Yeah, but as you mentioned, very very thin volume. I think we did like 100,000 shares. The only other thing that I'm really keeping an eye on is this MS that's near support here. We're looking to buy up through this 97 area versus the current low of 92 to prepare for that bigger kind of blue sky breakout up through that like 106 area. The only thing to consider is now the 200-day has been acting as support for this in MS for the past year or so, and now it's starting to test it. And this is one of those things that we've saw with a lot of the growth names that did get kind of beat up, where when they did get down into support and that 200-day was now acting kind of a little bit as resistance, is when we started to see a lot of those names kind of falter. So this would not be one that, like, if it goes under 892, like I would definitely be out of it. I wouldn't try to, hold it if that base was breaking down. But if this area could hold and you can get up to 97, I think that could be a nice risk reward trade to buy up off of support, to be prepared for that breakout versus trying to be perfect and buying that 106 breakout and wanting that continuation immediately. So that's just one of the main charts I'm keeping an eye on this week.
Nice.
All right, so that's all I got. I'm down a computer at the moment.
Yeah, you can lead a horse to water, but you can't teach it how to drink, huh? I give you a computer, I give you a setup, I give you a screen.
Jake, you don't have
just treat it like shit.
You don't have an extra cable you can mail me?
I actually have about 1,600 of them. Whatever you need, I got you. What we got? Good trade, bad trade?
Yeah.
So I had a good trade. I scalped the SPY today. It was a nice little trade. And I used to come into the days more like, really trying to trade the market. And I was doing really well with it until I wasn't. And then it just kind of seemed like such a big waste of effort. I'm coming in like, tick trading the S&P almost. Mm-hmm. So I kind of switched my gear into my train of thought, thinking like, I'll be around, I'll watch the market all day. I'm not going to put on any trades unless I feel like it's like screaming at me to make this trade. And that's kind of what I got. So today, we see the SPY finally testing the bottom end of this range. Didn't get all the way to lows, but 425, 427, some big support. So, obviously the headlines are so bad. Russia, Ukraine, this, that. So Biden comes on to speak about the sanctions he's putting on, and the market's just been selling off all day. So this wasn't some like, because the sanctions say this, because da 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 da. This was just pure price action. We're selling off all day. I made the comment into the Alpha Chat that it's funny that we're seeing stocks sell off on such low volume because buyers aren't stepping up, but we're still seeing that move lower. So it's like, it almost seems like the sellers are getting exhausted and we might be ready for a move higher. So then Biden starts speaking and we just see this huge buying volume come into the market. So I get, pretty long, this 427.50, 428 area, just against these 426 lows. And it gives us a nice little move. So I'm taking some off into 432. We make a new high and turn around to get out of more stock. And then once we break this little mini support to the downside, I'm fully out. So that was a nice little scalp I had. And definitely changing that train of thought to, only if the market's like begging me to, if we see a huge rinse of that 420 area and then we see a massive buying volume come back again, that's in the SPY, like that's an area, again, I would look to take some long. But, we're right now, the support and resistance is such a wide range, it doesn't make sense to try to buy and sell every day to me. It's just going to give you a headache. And it's just really low probability, really.
Yeah.
But besides that, what do I got going on? So I had a nice long-term trade this going in this WWE. I told you wrestling was back. I fucking told you wrestling was back. So huge support level. They have these earnings. I go check out the earnings. They have the subscription business that's really doing well. The WWE subscription. I gotta subscribe. Is that all I know? But so I buy this. This 53 area when it breaks those earnings highs. I didn't buy it too heavy because I thought it would give me another shot given this market, but it just kind of took off to the races. Now this is more of a long-term trade. I'm not trying to scalp this one. I think this one looks really good going forward, and the reason I really liked it was the monthly chart. If we look at a monthly, let me get these lines out of here. It's just basing at a prior resistance area. It's been basing here since January 2021. So a year later, it has these good earnings, gaps up, and my entry is at 53 right there, and it looks very good for the long term. Some negative trades, some BMRN. I've mentioned that BDX before. This is kind of a similar setup to it, which is why I liked it, but it just didn't work out. So I had a very small amount of this BMRN the first time when it began to break these highs. Mm-hmm. And I was trading the long-term account here. This was nothing heavy. And then, so it comes down, pivots that area, gives us a move higher. So then I add, once again, above this 91 area. And I'm just having a tight stop, just to this pivot low here at 89.50. Gives us a couple day move higher, and then just gets spit out. So factor of the market there, factor of selling. I guess biotech, more of a risky name. So that got taken down. I'm still in this DOCS. So I like their earnings gap up. I like the kind of change of composure in the stock. They have some good guidance going forward. So I saw it put in a pivot here. It broke the pivot high. I got long in this area against this 54 area. Doesn't look great. I got a gap down this morning. 15-minute rule kept me in it, but I'm in it till it breaks this 54 area to the downside. And right now it's still continuing to base. So that's really what I've been up to lately. Just trying to keep it pretty chill while the market's very difficult.
Mm-hmm.
What have you been doing over there?
So the really only thing buying wise has just been on M1 with the weekly buying with buying the Shopify's, the Amazon's, Etsy's, or the big picture. Nothing really from an active trading standpoint other than X-Ray that was 2 weeks ago, and I basically just shook myself out for break even, and it ended up working kind of exactly where I wanted to go, but didn't make anything in it. I think this is a good time just to remember, more so for like the younger guys when they're getting in and there's that expectation of I want to quit the day job and trade full time. And I think when you have these difficult periods, for us maybe it's been the last 2 or 3 months, and when you have that thought of okay, I want to just trade full time and that's my main source of income. Well, the last 3 months have been pretty crappy, and for us, we most of the members have that luxury to not have to put risk on because they have a primary source of income that's bringing money in for them, where there isn't that constant pressure to have to put risk on. And I feel like as frustrating as these periods can be, it's also, you don't need to put risk on it, and to sit in cash is completely okay. And that's just something I've been doing from an active trading standpoint. Longer term stuff, I'll continue to buy things weekly because it's a separate, methodology. Yeah. But really nothing from an active trading standpoint at the moment. No trades.
Yeah, no, I'm with that. It's a very difficult environment. There's no need to chop yourself up. Only take trades when it's just screaming at you that you have to take it. That's kind of what I've been trying to tell myself lately. So keep the activity to a minimum. All right, let's go book of the week.
What do we got?
I'll start. So I've been traveling like crazy. I haven't read shit, but
great book to read.
My HBO insider Mo Gici, he was telling me there's this Carl Icahn documentary on HBO.
Mm-hmm.
And I heard from a couple other people too. It's called The Restless Billionaire.
Mm-hmm.
That's a great title. I think that's a must watch. I think that's a must watch. So I got that on the helm. I didn't see it yet, but I have really nothing else to offer. So this is what I'm offering you.
So, so I actually have a book that relates exactly to what you're saying. The book I just read is When the Wolves Bite. And this is basically the battle between Carl Icahn and Bill Ackman's battle with Herbalife, And there's a couple funny stories in this. They obviously love the guy who wrote this. Actually, he's on like CNBC or Smart Money. He's a commentator on one of those shows. What the hell is this guy's?
Oh, Scott Wapner. I love that.
Yeah.
He's the only talking head who's like fucking a G. He knows what's going on really well.
Yeah, so
great interviewer.
Yeah, so he authored the book, and it's more focusing on Bill Ackman and his like crusade of basically trying to expose Herbalife as a Ponzi scheme and that they should basically go to zero. And he's heavily short, but that's not why it should go to zero. And they basically the initial battle between Bill Ackman and Carl Icahn started. It was like in 2006. Ackman sells some stock to Icahn for like $80 million because he had to raise cash for his fund or whatever. And in the agreement, they fill in what's called like schmuck insurance, meaning if Icahn flips this stock for a huge profit the next 3 years, he has to split the profit with Ackman. And a year later, a company comes in to buy out this company, and Icahn says no to the offer, but the deal goes through, and he is basically forcefully sold out of the position for a massive gain. And he thinks that he doesn't owe Ackman any of the profit because even though he's sold, he didn't want to sell. And there's a 9-year court battle that goes back and forth, and eventually Ackman wins, and Carl Icahn has to pay Ackman out like $10 million plus like 9% interest over that 9-year period. So there was like this decade-long feud for this money, more for principle for these two guys than the actual monetary amount. But that started the initial feud, and then when Ackman comes out with this huge, and you can find him on YouTube, when he did these like 3-hour presentations of why he was shorting Herbalife, all of these like hedge fund guys kind of came out and took the other side of the trade. And Carl Icahn being one of them, and he gets on the board, and it becomes this just battle of just who's going to be right. And then that's pretty much the premise of the book. But they really paint Icon as like the legend, can do no wrong, always right, super smart. They kind of paint Ackman as like the pompous little rich kid who can never admit when he's wrong. But nonetheless, they both are still both billionaires, both crazy traders. But there's definitely some, it's definitely a very interesting book. And I think a lot of it just the difficulties of shorting, I think, is really highlighted in this where, Ackman gets short the day after. It was Einhorn gets on one of the conference calls and tries to kind of flush out Herbalife's sales tactics of how they kind of just recruit people and they have to buy the product. So Ackman starts his short after Herbalife gaps down 40%. So his initial cost basis, it's he's off to a horrible start, and then the name's up 100% against him, and he wouldn't there was opportunities for him to cover and make money, and he just wouldn't do it. He just wanted the company to go to zero, and the company's run for 40 years. It just wasn't going to happen, and just kind of goes into when you publicly talk about names or opinions and things, how hard it can be when to change that and say, no, I actually covered or I took a profit when you were expecting and publicly expecting all these things to happen. But I guess along with that documentary, this was definitely a pretty interesting book if you're into learning how these guys actually trade. And their stuff these 10-year turnarounds for a lot of these moves these guys are making. It's not very short term as what it seems to be, or at least that I thought it would be.
It speaks to I thought it was Ackman, but it was Paul Tudor Jones who's sitting at the desk. He has a famous picture that says behind him, "Losers average losers," and Ackman has all these like great rules of investing, and he broke every single rule of them in that Herbalife trade. It's so funny. It's like, when you put yourself in front of the trade, your ego gets involved. Yeah. It's a disaster.
And it was when there was a pivotal point, I guess in that era of that Herbalife short, where he was short Herbalife and smoked in it, and was about to cover the trade, get basic, not squeezed, but he's gonna get smoked in the trade, and then he gets news that the FTC is gonna fine Herbalife a small amount of money, and then the stock comes down, and it was in that moment when you're about to get shaken out in a trade, and then you mentioned the 15-minute rule today in one of your trades that kept you in. For him, it was one of those on just a massive scale. He was about to throw in this in the same 5-year short, about to just give in and call it defeat, and then the trade went a little bit in his favor, and he held on. But then it goes into when he gets stuck in Valiant, when that was one of the most popular biotech stocks, a couple years ago.
Another one. Yeah,
and he he even says he got involved in Valiant super late. His cost basis was $140, and he had a few $1 billion in that name. It's no longer trading Valiant, VRX. But he never took profits when he was up more than 100% in the name, because he's it's going to go to 1,000, and then Hillary tweets about it, and then it's this whole cascade of just horrible news that comes out, and then this the stock's underwater, and he's down billions on the long side, long Valiant, and then losing billions on the short side with Herbalife. So it's you get both things doing the complete opposite. So it's crazy, but very easy read. For the 200 pages, definitely an easy one to kind of breeze through. I read it in a day or two.
That looks good. All right, folks. That's all we got for you.
All right.
See you next week.